All right, hello everybody. Welcome back to another episode of Daily Palantir. I'm just gonna get straight into it. We're not really gonna do the whole intro thing, because today sucks, and it doesn't really suck because Palantir stock is down because it is down, and that probably does suck. That's not fun. Now, granted, the entire market's down. Palantir's getting hit a little bit tougher than the rest of the market. It was just below 60 or below $70 right now, right back at $70. So nice to see us. Just above 70. We were at 69.87 a couple minutes ago. But the reason this actually sucks, the reason this is not fun, is because there might be a reason why Palantir is down. And that reason might be none other than Mr. freaking Jim Cramer. I can't even, I just don't know why he had to mess with us. There's so many stocks out there, so many different companies he could have taken a stab at, so many different leaders and CEOs that actually would go on his show and talk to him. Why Palantir? Why us? Why did it have to be us? It ended up being us. Not only us, it was actually Tesla as well, and Tesla's down below 400 right now today as well. But basically over the past couple days, Cramer, and this started really Sunday night, where he said that he's starting to like Palantir and Tesla a lot more. So as you can see right here, he said a couple of days ago, two things. So, working on a Sunday brainstorm about Palantir and Tesla and the need to do so because of the protective intellectual blankets they give you. I don't even know what that means. He's working on a Sunday brainstorm about buying Palantir and Tesla after Palantir and Tesla have had monster runs. Because of the protective intellectual blankets. What? And then a couple days later, at night, he's like, unless another analyst starts with a sell, I think we will see the beginning or the buying in Palantir starting around 3:30 a.m. tonight. I don't even know how you come up with that theory that at 3:30 a.m. in the night, people will start buying Palantir. Where does that come from? But he said that. And then today, he's like, Palantir should make its move. And then just now he tweeted, well, I said I wanted to buy Palantir when it came down. And here I am saying, oh, doctor, let it come in. It almost makes me feel like he knows what he's doing right here. And he wants Palantir to go down. 69.87 on Palantir. I think we got to 69.80 or 69.69 at one point. Let's see. What was the 69.75? That's where we got to. On the lows right now, we're at 70.14. So, look, I'm being a little facetious here. Obviously, it's not only because of Cramer, even though one could argue it probably is a decent amount because of Cramer. But the point is, Palantir's down today. Sucky day. It is what it is. Quick thoughts on price action. Then I'm going to get into a couple other pieces of news that I thought were really important today because there are some actual fundamentals going on in terms of Palantir, the company. First off, I'm going to say the same thing I've been saying for the past couple of weeks, really the past couple of months now. We are extended. The valuation's high. Anyone who understands anything about finance and investing and valuations knows that Palantir trades at a 70 times price of sales. It's expensive, right? And we all know it's expensive. I think have chronicled a good amount of reasons for why the qualitative aspects of Palantir continue to allow justification for its valuation outside of the quantitative elements, because quite frankly, I can't justify it from a quantitative perspective outside of them showing massive growth, which maybe they're going to do, but it would have to be really massive growth for them to get there. And if they don't get there, quantitatively, you can't make the numbers make that much sense. At the end of the day, they're numbers, and if the numbers don't make sense, the numbers don't make sense. But when OpenAI is worth $150 billion, and Anthropic today announced that they're raising $2 billion at a $60 billion valuation, what is Anthropic? It's just another LLM foundation model creator, similar to OpenAI, similar to Gemini. It's just a company in and of itself. They've got a massive investments from Amazon over the past couple of years. So when these companies are raising at these types of valuations, and they're not profitable or they're not really operationalizing AI in the way that Palantir is doing it, you start to at least have an understanding of why the market is excited for Palantir. Nonetheless, we all know Palantir is expensive. At 50, it's expensive. At 60, it's expensive. At 70, it's expensive. At 84, which I believe is where we were at the end of the year before we had the fall after Jerome Powell had his press conference, and then we went back down to 75. We were also expensive, right? And it is what it is. I've come to the conclusion that Palantir is going to be an expensive stock forever. It's always been expensive. It's probably going to be expensive, but people want to be part of the story. People want to be part of the name. And because they want to be part of the story and part of the name, they're likely going to get excited for the stock. Now, why am I bringing this up? Well, if it's an expensive stock, and you've got a ton of macro uncertainties that I'm going to do a quick little refresh of some of the macro uncertainties we had today for those that are interested in understanding how that implicates growth stocks. That's where you can get multiple compression. So what happened today? We got the JOLTS data. The JOLTS data in the United States of America is how many jobs are open. The market expected 7.5 million jobs. We had 8 million jobs. Well, you might think on first-hand impression, that's a great thing. We have 500,000 more jobs. People can get more jobs, and then boom, people are employed. The problem is it's the same battle we were having in 2024 for the majority of the year, which is that if people have more jobs and they're spending, there's going to be more inflation. Right now, the 10-year bond is at basically 4.7%, and that 10-year needs to come down in order for mortgage rates to come down, and the 10-year is not going to come down unless they think inflation's coming down. If more people have jobs and those people have the ability to then spend money from those jobs, that creates more inflation. Inflation has been on the upwards since September of 2024. We bottomed at 2.4 on CPI. Now we're at 2.8. And if we come in on January 15th, anywhere at 3%, it could be a bloodbath. It quite frankly could be a bloodbath. Now, I think that would be a good opportunity if it's really a bloodbath. And, if we do see a massive dip, then I would not be complaining in terms of having an opportunity to add more to my position. But the point is, this is something everyone needs to understand. That's why when people say understanding the macro is pointless, you just have to understand about the company. It's like, no, understanding about the company matters, but the macro determines a lot about how the company moves because the company is a public stock at the end of the day. And if you don't understand the macro, it's very hard to make sense of what's going on with the company. So when we think of the inflation problem, the implications here is that Jerome Powell, the chair of the Fed, might not lower rates soon. That's bad for growth stocks. Lower rates give growth stocks a premium. Without lower rates, we don't get that premium. And number two, if inflation doesn't come down strong enough, you might have people just sell off and take a lot of their profits, take their money, keep it in a money market fund, keep it in cash. Money market funds actually had $96 billion of inflows over the past 2 weeks. To me, that's people going risk off and taking some profits and then putting it on the sidelines, getting a risk-free rate of return of about 4%, which doesn't look like it's coming down anytime soon if inflation's not coming down. And as a result, how does that affect Palantir? Money leaves Palantir, right? Money leaves Tesla, Nvidia, all these names end up getting some money that leaves their stocks. This is not to be bearish. This is not to say this means to sell the entire position, yada, yada, but rather it means to say you have to understand a little bit about what's going on in the macro. I think, I'm blaming Kramer, but that was just a little funny bit. The macro and this JOLTS data, along with Palantir's extended valuation, which we all know is extended over the past couple of months, you put that together, and that is what gives me the down 7% day that we're seeing right now. We just fell right back under $70 here as I'm recording this video, just above 70. So it's tinkering above 70, right? The market's trying to stay above 70. If you look at the left-hand side of my screen, everything is red. So it's not just Palantir, but Palantir's growth stock that is extended in terms of its valuation, obviously because we had an amazing run in 2024, and that's going to lead to some profit taking, especially on a name that people are up a lot of money on. So in general, those are the headwinds I see for Palantir right now. Obviously, earnings has to be strong, and we're going to see what happens on earnings in the next few months, but from a macro perspective, we have a lot of jobs available. That creates more inflation. That keeps the 10-year elevated. The Eurozone said they had 2.4% inflation today. That's the highest since July. So inflation's coming back in different parts across the world. It could come back for the United States. And then you have the flip side of all of this, right? Which is, what if all those jobs are fake? What if all the 8 million jobs, or a decent chunk of the 8 million jobs that were reported today in the JOLTS report, are actually fake? And we should be cutting rates aggressively because the labor market's cooling and unemployment's going up and there's not that many jobs for people to have. And if we're not cutting rates because we have fake data or data that's not as accurate, then whenever we figure out it's time to cut rates, it might be too late. So those are the scenarios that I think we have to sort of navigate in this market right now. And, every stock is trading. It's not just Palantir, by the way. Every stock is trading at an extended multiple. Palantir just had a phenomenal 2024. But 2024, the markets went up 25%. And 2023, the markets were up like 24%. So 2 back-to-back years of really good returns in the markets will lead to certain stocks being extended. And that will lead to people taking some profits. Now, having said that, 2025 so far has been a buy the dip year. And I know it's only been 7 days, so we don't have a lot of data to go off of. But in 2024, every time there was a dip, the dip was bought in any scenario, whether it was August 5th, whether it was September 6th, whether it was October, whether it was April after the Israel-Iran situation happened. So many times you had a dip, there were people within 2 days max, from what I remember, that were ready to buy the dip. Honestly, within 2 hours, people were ready to buy the dip. If that happens in 2025, tomorrow, Wednesday, maybe Palantir is back at 72, 73, and people are ready to buy the dip, and Tesla's back at 400, Nvidia's back at 145. So, we're going to have to see how long this dip lasts and if this dip is a more prolonged dip based on some of the macro data that we're getting, or if this dip is going to be a little bit more substantial, which could happen. And I think a lot of people that watch this channel and care about Palantir probably wouldn't mind getting in at a cheaper price, right? It is what it is. I know a lot of people have been waiting to add to their Palantir position again. So the sort of core thing I'm trying to say right here is that although I see the weakness right now in Palantir, I don't see that weakness as a company weakness thing. I see that weakness as hey, the stock is extended aggressively. Macro is really uncertain. You have an extended multiple, uncertain macro, market hates uncertainty. You might just have people taking some profits, and it is what it is. And it happens, right? We had an amazing run in 2024. You might have a little bit of a decline in 2025. Ultimately, earnings growth is going to determine the real trajectory of this company, and we're going to get Q4 earnings in February. So let me know what you're doing with your Palantir position. Have you trimmed any of it? Are you keeping it? Are you not keeping it? Are you selling covered calls? I think selling covered calls in this environment is not the worst thing. Now, granted, 2024 covered calls went really underwater. Maybe when there's some weakness, selling covered calls is not that bad of a situation. I'm sure there's a lot of people that are in some covered calls right now that might be able to buy those covered calls back as we are seeing a little bit of a decline. But the point is, it's not really about Kramer, even though it might be a little bit about Kramer. It's more about the macro, and it's important to understand the macro in terms of what's happening with Palantir. All right, I want to end it off with two actual things about the company that are important that I found out about today. Thank you to Arnie for posting this, which was super cool. And this comes from Mr. Lewis Mosley, who works at Palantir, and I had the honor of actually meeting him at a PCon earlier in 2024. And he disclosed this today. So we rarely get to talk about Palantir and what they do for defense organizations. So I was proud to see Defense HQ disclose the existence of Palantir-backed Nordic Warden yesterday. As Downing Street says, this cutting-edge technology is helping NATO and GEF nations to protect the Baltic Sea from Russian sabotage. I learned about what the GEF nations were today. I did not really know what they were, but this is the Joint Expeditionary Force, a coalition of like-minded nations who share values and common focus on security and stability in the high North, North Atlantic, and Baltic region. So you've got Palantir that's working with GEF, and I didn't know that was the case, but apparently that's the case. So Arnie wrote right here, Palantir is helping NATO and GEF nations protect the Baltic Sea from Russian sabotage. GEF nations is led in the UK. Nordic Warden, backed by Palantir, is the AI system that identifies ships and calculates the risk posed by each vessel entering areas of interest. Protect, expand, and win. So pretty cool. We're seeing another version of Palantir's software in a different vertical, in this case for defense, being used in a meaningful way. And again, there can be plenty of bear cases for Palantir. The one bear case I think is very hard for the bears to make is that they don't have a moat that can easily be identified from other defense companies. I mean, it's just very difficult to do what Palantir does, get the trust that Palantir gets from governments. Palantir did get a contract with the Ministry of Defense in the UK a couple years ago for $78 million. And so they've been working. Babcock is another defense contractor in the UK. They've been working with them. So they have a deep history in terms of actually getting sticky and involved in defense issues when it comes to the UK. And this is just another example of how they're working in the UK and continuing to gain momentum. Final piece of news, we had this yesterday. I never knew about this company, but this company apparently is working with Palantir. And some of you guys probably know about this company, so let me know if you do know. Ellis Don. Palantir partners with Ellis Don, a global construction services and technology company, to deploy AI. So they made this announcement on their press release yesterday. Ellis Don Corporation announced that it has partnered with Palantir Technologies, a leading data analytics company. These efforts made by Ellis Don will deploy operational AI and enhance the company's insights and analytics team's capabilities. The collaboration between the two companies began in summer 2024, so very recent. The partnership has enabled Ellis Don to leverage Palantir's advanced data analytics and AI platform to optimize its operations, increase efficiency, and drive growth. CIO of Ellis Don, Brandon Milner, said, "We are thrilled to finally announce this agreement with Palantir. This partnership has helped us achieve significant progress in our long-term strategic goals and position the company for continued success in the highly competitive construction technology industry." Prior to the deployment of artificial intelligence tools, it was necessary for Ellis Don to build out a modernized, cleanly structured, and operationally prepared data environment. Ellis Don's digital and data engineering team has been working on this transition since 2010, turning a legacy construction data environment into a fully modernized one just in time for AI to become viable for deployment. Really cool stuff. Really, really cool stuff. You're seeing Palantir find other verticals to expand into, in this case, a construction company that is trying to leverage AI for operational efficiencies. Obviously, a lot of these companies are entering into the modern era, and not only do they have their data set up for prime time to be useful via AI, but now they actually want Palantir to be the operating system that empowers them to go further and build multiple use cases on top of the operating system, aka Foundry, that they're using, leveraging AIP, and then actually building use cases that are meaningful enough for the company to thrive. So, two good pieces of news on Palantir, even on a sucky day. Valuation's up there, macro's uncertain. This is why I think we're seeing the volatility. It could also just be algos that are selling it off because the entire market's selling it off. So just something you have to keep in mind if you are owning and holding Palantir. Look, I think in this situation, it's one of those things where you have to remind yourself how amazing of a run Palantir has had from $6 to freaking, forget 60, 10x, we're at 80. We got to 80, 84 at one point. So it's one of those things where it's like, I think everyone objectively, no matter how bullish you are, and I know a lot of bulls that still believe, hey, the valuation's up there. And we've seen this, right? Over the past couple of years, this stuff happens. Things go up and then they get a little bit expensive. Things come back down. It is what it is. But the far more important thing for me to understand is, why is this happening? Is it a company specific thing? Not really. There's been no fundamental news, no earnings, nothing like that. Is it a macro related thing? Most likely, in my opinion, it's very macro related. And then number two, if it does happen, maybe we get to $60, $50, whatever it may be, is that the worst thing in the world? As someone who genuinely is long the company, I'm not long a lot of companies. There's really two companies I'm actually long right now. Palantir and Robinhood, and slowly working on building up the Tesla position. Like I want to own these shares for a very, very long time. And so if I get an opportunity to get in cheaper, I wouldn't mind that. My analysis around this situation is, why is it falling, right? Why do I get that opportunity? Is it something that happened bad in the company, which sometimes it happens, companies have bad quarters, or is it more macro algorithmic driven? And at least on a day like this, it seems a bit more macro algorithmic driven, and Palantir getting caught up in it because its valuation is extended and the macro is turning a little bit to more uncertain issues. All right, that's it for me. Thank you everybody for listening and watching. Let me know your thoughts and concerns. Put it in the comments. Any thoughts on what you think about this stock, valuation, price, if you would be eager to buy the dip, if you do get a substantial dip, and what you think of the two new deals that we announced today in terms of partnerships with different defense organizations and construction companies, all of them leveraging AI. Thank you everybody for listening and watching. I'll see you guys in the next one.